Hey, what's going on, everybody? It's Chris with Life 180, and I am here on a boat in the middle of Los Hayeteses National Park in the Dominican Republic. Took a boat last night, and I'm such a nerd. We spent the night on this beautiful sailboat, just touring around, and decided to wake up this morning and film some video on life insurance. And it was funny, we were actually joking around about the power of life insurance. And man, if we were stranded out here, wouldn't it be nice to have more life insurance? And we were kind of joking. And I'm like, you know what? I want to make a video on this. And so I came to the front of the boat. Everybody else is in the back, about to have breakfast. I got my coffee. We're just chilling. And I thought it would be fun to hop on here and talk about the powers of whole life insurance and what it can mean for people, and basically how it can impact you positively in every phase of life. And so let's do it. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Let's go. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and I'm going to be speaking today about the power of life insurance. You can see I'm in the middle of the Dominican Republic, filming this from the ocean, and it's pretty magical out here. I'm really having a lot of fun. It's a lot of fun making this content in these different unique spaces. But for this video, we're going to be talking about whole life insurance and talking about basically all the different ways that it can impact your life and the different features that it provides you at different stages of your life and all the different elements and ways that it can help you. And so I think one of the most important things to think about is when you look at whole life insurance, when done properly from an airplane perspective, one of the most important things to understand is it's not just death insurance. You know, a lot of people think about life insurance as death insurance, and the bottom line is nothing could be further from the truth. It's called life insurance, and I look at it like it's called life insurance because of the fact that you get so many benefits throughout your life. You have access to cash value. You can utilize it for living benefits if you need it for medical, alternative medical treatment. You can utilize it for tax-free income and retirement, as a volatility buffer, as an emergency fund, as an opportunity fund for your business. There are all sorts of different things that you can do, but it's all about making sure that you spend the time to design it to meet your needs, your goals, your objectives, and kind of go from there. And so this video, I'm going to go through some of the different ways that it can help you, some of the different ways you can design it, some of the different things that you can maybe utilize in the policy to structure it to meet your specific needs and goals and desires. So hopping right into this, I think where I want to start is the fact that whole life insurance is life insurance. It's going to be with you for your entire life. I think that's one of the most important components. Unfortunately, I think there's a lot of people out there, Dave Ramsey, Susie Ormans, those types of the world, the Primerica people of the world, that will tell you that buy term and invest the difference. That's the way to go. I think there's a really short-sighted component of that philosophy. And I think the fact that you have life insurance with you, whoa, big fish just jumped. I think the fact that you have life insurance with you forever is huge. And it's not just the life insurance. It's the fact that you have the living benefits and the cash value accumulation that goes with it. Because it's funny to me that if you look at the fact that Dave Ramsey and Susie Orman and all these people would tell you you need an emergency fund, well, a whole life insurance policy, they always seem to talk out of both sides of their mouth. And they say, well, you need an emergency fund, but you shouldn't use life insurance because it's a bad investment. Well, life insurance is not an investment. It is an emergency fund alternative. It's not an investment alternative. It's an emergency fund alternative. And when you look at it through that perspective, and when you understand the fact that that's kind of the need that it's solving, and then you look at it from the life insurance perspective, and you realize that, okay, it's got my safe money taken care of, and it's got like my emergency fund taken care of, and it's got the life insurance and the living benefits taken care of. Like, that's the biggest thing when Dave and Susie and they go out and they say, hey, listen, you only need insurance, life insurance, for maybe 15 or 20 years while you have kids and you have debt and you have all these things. But they don't ever take into consideration the fact that the living benefits on this life insurance is going to last forever. And the reality is you're very, very likely to need to utilize living benefits during your life. I mean, I've read statistics from LIMRA that show a 70% chance that you're going to need long-term care while you're alive. And if that's the case, having access to the living benefits while you're alive is going to be absolutely pivotal in your success, right? Like I share the story about my father-in-law getting pancreatic cancer and being, having access for alternative medical treatments. It's that kind of stuff that can change your life, that can save your life, not having to do traditional radiation and chemo. But the problem is most times people are stuck following traditional Western world medical treatments because of the fact that, that's all their insurance is going to cover. And so I think that's the biggest part that is missed with whole life insurance by people that are telling you to buy term and invest a difference is the fact that whole life insurance is not just death insurance. It's going to have all these other features, and it's going to be with you for life. And at every different stage of life, you have different needs. Right now, if you're in your 20s, you got to start building your emergency fund, probably in your 30s too for a lot of people. As you can go beyond that, if you want to invest in real estate or start a business, you can use that capital to start a business, to invest in your first real estate property. Maybe once you capitalize it properly, you can slow down and you can pay it up, and you don't need to keep funding it forever. And there are fish jumping all over around me. You don't need to fund it forever. But the bottom line is, it's like once you hit that place where you stop funding it, now you can have living benefits forever. And you have that, if you become chronically, critically, or terminally ill, you have access to that money while you're alive. Your death benefit can be accelerated to cover alternative treatments while you're alive. And that's just something that's not talked about. And I think it's really, really a tragedy that they don't talk about that. The next thing that I would talk about with whole life insurance is the fact that it is a guaranteed death benefit. There are other policies like term insurance, like index universal life, like universal life, variable universal life, all these different other policies. The only type of policy, and a lot of these will have living benefits, but not all of them, none of them have guaranteed death benefits that'll actually be there. Now, there always will be a guaranteed column on the UL policies, any UL chassis. But typically, if you look at the guaranteed column, it runs out really, really early. And so for the most part, what you want to look at is the guarantees for whole life. And I'm a big believer, you got to look at what's the upside, what's the downside, can I live with the downside? And if you are comfortable with what it looks like on a worst case scenario, then from there you can make a plan moving forward. I think one of the reasons that people struggle in this world is they take too many big swings, too many chances and risks before they're able to afford the ability to take that risk. And then when things don't work out, you got to take a step backwards and start over. And so I think being able to have this perspective of building your financial foundation and having yourself financially secure on the front end, having the foundation built, will help you and enable you to be a better, more effective investor as you move forward. All right, now let's talk about the premiums for your whole life insurance policy. Now, there are different ways, different blends that you can have when it comes to making your premium payment. You can have blends like 100% base policy, which I don't suggest doing. In fact, I would strongly urge you not to do 100% base policy, simply because you're going to have no flexibility. You're going to be committed to that premium amount, and you're going to have very little cash accumulation in the early years of that policy. So we want to make sure we do the right blend. But when you design the policy properly, you'll have flexibility in that policy. You'll start building cash value of that policy. You will be able to have an emergency fund, an opportunity fund, and the flexibility. You can front load a policy. You can maybe say, one of the things I always kind of say is you should always figure out what is the amount that you can afford to pay on an annual basis. It's kind of like a general rule of thumb. You don't have to wait till you have a big lump sum of money. That's a question that I get a lot is, should I save up a bunch of money and then start a policy? The answer is no. You're better off probably to start a policy sooner if you have the cash flow to do it. But if you are sitting on some money, and maybe it's in a bank account or a CD or a bond or something of that nature, and you're like, I'd love to front load a policy. The general rule of thumb is whatever you can afford on an annual basis, let's say it's $10,000 a year in premium. you can front load in the policy up to about 10 times that amount and make it work still. So that's kind of a general rule of thumb, is that 10x rule. So if it's a $10,000 premium annually, you can put up to $100,000 a year up front into that policy, not per year, but up front. And then you continue that policy with a $10,000 a year premium, and that could be really extremely powerful as far as accelerating the growth and the efficiency of the cash accumulation in your policy. Do you need the $100,000? The answer is absolutely not. It just is kind of like putting oil on the fire, so to speak, and it helps it grow, it helps it be much more efficient. At the same time, if you don't have any money right now, it does not make sense to wait and save a front load and then start. It just makes sense to start if you have that $10,000 in cash flow. That's really important to understand. But whatever you're doing, make sure that you are comfortable with the premium amount. Make sure that you start with the cash flow side of it and that number makes sense to you, that it's comfortable for you, that even in down years you think you can cover it. And make sure it may not have to be all $10,000. Like for instance, if I did a $10,000 premium on an annual basis with a $100,000 front load, I could look at that and I could say, okay, with that policy alone, depending on the blend, let's say I did a 30-70 blend, that would mean roughly my premium requirement is, let's just call it like $3,100, maybe $3,200 would be my required premium every single year. Everything above the $3,200 would be paid up additions. So from there, I would say that builds in a lot of flexibility, because even for people that maybe say, all right, $10,000 is the number, if times get tough, it's a lot easier to say, okay, I'm just going to make my $3,200 payment. Or you can utilize even the dividends, especially if you did front load a policy, you could use the dividends to cover the premium payment. You could. There's a lot of different things that you could do. My beautiful wife is walking up behind me. And so, there's just all these different things that you can do that will be really, really powerful, that provide a lot of flexibility. And when you do this, the beautiful part is it locks it in place for you. I think that's the biggest part about this, that people misunderstand, that people who are in the Primerica world, let's say, just kind of don't get, is the fact that it provides all these additional benefits, and you want to get these locked in as soon as you can. I mean, when you go through life and you have hard things happen to you, it doesn't seem like a big deal, and maybe it doesn't seem like a priority until something happens, until you realize, like, wow, what would it be like if I had that, right? Like, how would my life have been different if I had that in place to be able to take care of these needs? And unfortunately, if you don't do it ahead of time, it can be too late, right? And so that's something to consider. The other part about the lifetime coverage that I think is really important, that I talk about a lot on this channel, that I'm really just bullish on, I guess is the word to say, is the fact that it has the ability to give you access to cash for your entire life, and how you can utilize that cash at different stages of your life. Like I said, having the liquidity of the money for an emergency fund early on, being able to grow that, even if you don't need it for emergency, you can utilize it for opportunity, for real estate, for business. You can utilize it in retirement when you hit that next phase of your life, so you can utilize it as a volatility buffer. I will say this, is that it shouldn't be the only thing that you do. You're not going to just put your money into a whole life policy and get rich. It's not going to grow. It's not sexy. It's not like going to get you these massive returns, but it's going to be the foundation that you build everything else upon. If you want to do real estate, if you want to build businesses, we work with a lot of real estate investors. We work with a lot of people that buy businesses, flip businesses, do stuff of that nature. And if you want to do those things, this is just a great foundation to build upon. And having that set up early, I can't tell you how many times I've had people reach out and be like, wow, I wish I had done this. Actually, I talked to one guy who is doing a monster policy. Now he's a couple $1 million going in, couple $100,000 a year in premium. And, he's been looking at this concept of infinite banking for 20 years, almost 18 years, I think he said it was. And he said his biggest regret in life right now is not starting this earlier. And he's just starting it now. And so it just goes to show the power of what you could do with this, right? And at the end of the day, nobody else nothing else is going to give you the guarantees along with this. Is people will talk about index universal life. They'll talk about other buy term and invest in different strategies. You cannot solve long-term problems with short-term thinking, and utilizing a whole life insurance policy is the only, I will tell you, whole life insurance is the only financial asset in the world that will be able to start now and that will build with you and that will solve different problems throughout your life on a guaranteed basis. I always say, whole life insurance is the only financial tool in the world that will make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not, and it will grow with you and allow you to be a better investor as you go. It is not the investment that you make. It is the and asset. It is what I call the BASF of the financial world, which is, if you remember the BASF products, is they always said, we don't make the products you buy, we make the products you buy better. And whole life insurance is not the investment you make. It is the savings alternative. It is not the investment you make, but it makes the investments you make better. And that is an important thing to really wrap your head around. If you don't understand that concept, you need to slow down and you need to learn that concept. You need to figure out what that means for you, how you would implement that in your life, and then move forward. Now let's talk about tax advantages. Tax advantages are huge with whole life insurance. You put your money in on a tax post-tax basis, so you've already paid tax on the money that you're paying your premiums with, and then it's going to grow tax-free, and you're going to be able to have and access your money on a tax-free basis through policy loans and potentially or definitely withdrawals up to cost basis, right? Like you'll be able to access your money on a tax-free basis, and that is really, really powerful when you're talking about, depending on how you want to utilize it and leverage it throughout your life, being able to access that money on a tax-free, favorable basis is a huge, huge, huge thing that most people don't realize. I would say that one of the things that is important to understand is that, you want to make sure that you're working with an agent that understands this stuff. Your first goal is you got to find somebody that you trust, that's going to understand how to design these policies the right way, that's going to be able to set it up for you, that's going to be able to be there to coach you throughout the policy. That's one thing. What I would ask your agent is, what are they going to do to be there for you after the fact? How are they going to be there to support you when you have alternative investments, whether it's real estate opportunities, whether it's business opportunities? How are they going to be there to coach you through the best use and leverage of your policy and service you? Because that's a big thing. That's a lot of people don't understand. And I think that's one of the things that we do extremely, extremely well, is we have a whole team and support on the back end specifically dedicated to that kind of servicing work. The other thing that I would talk about is just the companies that you actually get your policy with, right? Because everybody, Life 180, our IMO, we represent a bunch of different companies, but it doesn't matter who you work with. Most of the companies that are out there marketing on YouTube and Instagram and TikTok and all these places, they're all representing the same companies. They're all focusing on maybe 5 or 6 or 7 different companies. There's really not that many companies that focus and allow you to really sell banking policies or buy and implement banking policies in the whole life space. If there's 40 or 50 whole life insurance companies out there, there's literally less than 2 handfuls. Sorry, I spilled coffee. Less than 2 handfuls of companies that are able to do banking the right way. So when I look at that and I think about, like, wow, okay, there are these 7 companies, let's call it. Which company is best for me? And the reason that we represent 5 or 6 of them in the way that we do is because of the fact not every company does everything well. Not every company does the same thing. Different companies have different underwriting requirements. Different companies have different restrictions. Different companies have different benefits and different ways that you can fund the policy and different riders and features. And so it really is a matter of aligning you with the right company. And I think that's a really important thing to understand, is that you need to work with somebody that understands your situation and that can align your policy with your goals and objectives, and make sure that you align with the company. I think too often people are just focused on the element of, oh, I want to be with the big four. And so they look at one of the big companies and they say, oh, I want these big, one of the like a Mass Mutual or a Northwestern Mutual or a New York Life or a Guardian, or like, don't get me wrong, I'm not throwing shade at any of those companies. Some of those companies I like, some of those companies I don't like. And what I will say, and I'm not going to get into details of what companies I do and don't like in this video, but what I will say is a lot of times, because those four companies have the biggest general accounts and they have the biggest general funds and they have the most assets, and people think that they're the most secure, at the end of the day, every company that's a participating mutually held company has to operate their general fund in a very, very similar fashion. And it doesn't really matter. I'd rather go with a smaller company, if need be, that is more in alignment with my values and my beliefs, that's going to allow me to operate and utilize a policy the way that I need to implement it. I think that's a big thing that people don't understand, is like, you look at an illustration, but an illustration, I bang on IUL all the time for the fact that illustrations are just smoke and mirrors. They're not real. So I bang on them all the time for that. But whole life is the same thing. Whole life, it's an illustration. Now, it's a little more stable. It's a little more predictable. But at the end of the day, if the current illustrative rate that you're shown is basically saying, hey, if they paid a dividend every single year, which they're likely to do because they've never missed a dividend in over 100 years, but if they pay a dividend at the current dividend rate, that's what is going to be shown on the current scale. Now, if dividends go up, that current scale will improve. And right now, with us being at an all-time low interest rate environment on the whole life side of the game, I really think there's a good chance that the rates will go up and that the policies will perform better. Is there a guarantee behind that? No, obviously not. But I look at this and I go, all right, if you understand that this is a bit of a smoke and mirrors game, that the illustration is just to give you a concept, just to give you an idea, and that at the end of the day, as soon as you get your policy, the illustration goes out the window. As soon as you start taking policy loans, the illustration goes out the window. Every company functions a little bit differently. Like when we talk about selecting the right company, my question to you is going to be, how are you going to fund the policy? How fast are you going to want to access the money? How much velocity of that money are you going to want to use, i.e. how many loans are you going to take and how fast are you going to pay them back? How many loans are you going to take? How fast are you going to pay them back? What's that kind of velocity? Because the loan rates for every company are different. Is it a direct recognition or non-direct recognition company? There's all these different variables that come into play that you have to understand, and it's not simply just what's going on in the illustration, because the bottom line is the illustration doesn't matter. And I see too many people make the biggest mistake of trying to compare company A, B, C, D, E against each other, and they just pick the best illustration, but they don't know and understand the fine print. And it's a matter of working with an agent that can help understand what are you going to use this policy for, and don't just look at the illustration, but understand the inner workings of the company and how is it going to function when you actually go to utilize it, how you intend to use it. And if you don't get that, you probably shouldn't do this at all for yourself. You got to take the time to do your due diligence, to go deeper, to work with somebody that can get you to understand it to that level, because you should never put your money into anything you don't understand, and you should work with somebody that can help you. And if you have any questions, I've got a lot of videos on this stuff. I'm happy to just comment in the comment section below, and I'll link it to you. Any questions that you have, I probably have, with over 1,200 videos on the channel now, I probably have a video on the topic, and I'm happy to link up a video to make your life easy from searching around for something. But at the end of the day, I thank you for being here. It's a little unorganized of a video for me being out here. I'm just thinking about so many things. My mind is wandering all over the place. But I think this is all. Hopefully, you've been able to take some snippets out of this. I think really what I wanted to impress on this video is just the fact that you got to start with the end in mind. You got to reverse engineer a plan to get where you want to get. Utilizing whole life insurance as a foundational asset in your life to build upon. That's why I do the Life 180 pyramid, is to kind of explain the importance of that and how to do it. But utilizing whole life insurance as that foundational asset is really the only option, because no other financial tool in the world will be there with you through every stage of your life, through that emergency fund, through the opportunity fund, through saving for your kids' college, through having living benefits, through all these different things, right? All these different phases of life, through having retirement income and using it as a volatility buffer, and then having the tax-free death benefit to for estate planning and all these different things. There's different ways that you can utilize it. At the end of the day, you don't solve long-term problems with short-term thinking. And so I would really, really encourage you, what do you want your life to look like? What are the concerns that you're gonna have 20, 30, 40 years from now that you don't even realize that you're gonna have? You gotta stop and think about what those are. And I think when you get out of the emotional components about why whole life insurance is bad, everybody's like, oh, it's a long-term commitment, it's horrible. Well, maybe you want that long-term commitment, right? Maybe the benefits and the value, stop thinking about cost and start thinking about value. That's one of the things successful people do is they think, and I think this is why I have an easier time selling this to wildly successful people that have run businesses and that just understand the concept and the principles of financial success, is they don't think about cost. Everybody's like, oh, whole life is expensive. Well, yeah, it's expensive, comparatively speaking to term insurance, but what's the value? And if you think about value over cost, and you start thinking about like, what are the things that I need, and then you realize the value that this product brings to your life solves all these problems, and that you realize the value when you look at the alternatives that you need with disability insurance, with long-term care insurance, and you look at the cost of those, and you look at the fact that you're 70% chance that you're gonna need long-term care insurance while you're alive. And when you look at the long-term care market and you realize whole life insurance, it doesn't replace long-term care from a pure basis, but it does absolutely supplement and can be leveraged and utilized for different purposes in that way. I will say this, is that if you plan on utilizing that and you want to have an estate plan, you probably want to make sure that you have some policies that are designed, some for that and some for banking and some for estate planning, and you just got to stack policies up to do it the right way. And so either way, you got to think long term. You got to realize this is a long-term commitment. You got to play the long game in this, no matter what you're looking at. But if you're looking at what, I guess I would say this, I would challenge anybody to go look for another financial asset around that solves all the problems that this solves for you. And if you find it, give me a call, because it doesn't exist. Like if you do though, I'll be impressed. But find something that will, like with one financial product that will solve all these different needs that you have and are inevitably going to have throughout your life, not just at death, but through your life. You let me know. So anyway, hopefully you enjoyed the view at least, and you got some value out of this video. Sorry for being all over the map, but felt good to kind of get it out and talk about this stuff. But appreciate y'all being here. If you haven't already, make sure you subscribe and hit the bell that we're notified every time I launch a new video. And have a blessed, inspirational day. I know I'm going to, and we'll talk soon. See ya.